welcome to Fathom In Person on this fine morning. The Rome is in Champions League semi-final, but more importantly I'm with Joanna Davies, our senior economist covering the UK, talking about the UK. First of all, we have quite a out of consensus call with regards to the outlook for the UK economy. Can you explain to our audience how in a nutshell, the ingredients that brought us to formulate this view?
Yeah, so I suppose what we saw in the wake of the unexpected Brexit vote was stronger or firmer consumer expenditure than many had anticipated, ourselves included. But in order to shore up consumption, what we've seen consumers do is dig into their savings. They've had to do that because prices of goods have gone up and their real disposable income's taken a squeeze. What we find concerning is that savings rates are hovering at near record low levels, and in times of uncertainty what consumers tend to do is spend less and save more, and with Brexit hanging over both firms and consumers, that's where we're coming from in terms of our worry really.
And so that's interesting because in a sense flips on its head some of the more positive narrative that we had from some commentators with regards to the fact that sterling depreciation would support the UK economy. In fact, if anything, you're saying that that's hurt the economy. So how do you explain, with hindsight, the rebound that we had post Brexit in terms of the economic outlook?
So you're quite right. We've suffered quite a lot of pushback on our view. A lot of people, including policymakers, were arguing that the sterling depreciation put businesses in something of a sweet spot, and through that would kind of offset the negative effect on consumption that the sterling-induced inflation and squeeze caused. But we've not really seen that. In fact, in two of the quarters last year, so 2017, net trade exerted a drag on GDP. Obviously recognising that this was something that a lot of our clients were thinking about, we actually wrote a newsletter on this topic in January, just looking at, in the past, sort of 40 years worth of data, what kind of effect could you expect sterling depreciation to have? And what we found is it was actually relatively little. And even that has disappointed. What matters far more is global demand relative to the UK's. And obviously we're benefiting from a global upswing, and the UK is getting a bit of a lending hand, a helping hand on that front, but it's still disappointed, net trade has.
Interesting stuff. And so looking forward, where do you see the UK economy heading, and how do you think our view is going to play out both on the policy front and on the economic fundamentals?
So, as you highlighted at the beginning, we are far more pessimistic than most in our view of the UK economy. How do we see that playing out? Well, we have an even chance of the UK entering into recession this year. What would we need to see to support that view? So ahead of the 2008 financial crisis, you did get a few indicators in terms of survey-based data turning down. And obviously, just recently we've had the service sector PMI for March, which took quite a sharp downturn. Of course, that's kind of partly weather-related, but a lot of the respondents were citing this overhanging economic uncertainty caused by Brexit.
Very good. And in terms of the policy outlook, do you see that this as a particularly important things for the UK economy, or do you see bigger clouds in the horizon from, for example, policy stalemate going forward? Investors seem to recognise now that the UK economy is in a worse shape relatively to other developed economies.
So odds are still on, based on market pricing, for a rate hike in May next month when the MPC next meets. What I think is quite interesting and has been overlooked really is that the MPC has most recently forecast GDP growth of just 0.3% in Q1. That's significantly lower than quarterly GDP growth rate reported or expected at past tightenings. So that's been around 0.8% on average. So this is quite considerably weaker. With that in mind, and the fact that we think there's still potential that the UK economy isn't just going to slow below the speed limit that the Bank of England believes to be consistent with the economy running hot, but we think it's already slowed. That combined, we aren't convinced that a May tightening is nailed on. But I suppose the point is, even if the bank did hike by 25 basis points, if we're right and the UK economy is in the process of slowing, that will be, just one and done.
Very good. So in a sense, our view has been vindicated, and I guess some of the PMI, services PMI that we saw over the last couple of weeks further vindicate our view. Very interesting stuff and great food for thought, or should I say coffee for thought. Thank you.
Thank you,
Joe.